Hi everyone, so this is my approach to the global indices for Sunday the 16th of February 2020. Starting off with the Dow. So overall bullish, not too overextended on the weekly. If I just take previous kind of highs as an example of that, we've pulled back, we've done a weekly retracement. Monthly has rejected, so far is rejecting January's candle. So actually still looking bullish, heading towards 30,000. Overall, not looking that bad. We did have some bearish divergence last week, so I'm always very cautious. We pull back, we've broken through that level of resistance and testing it for support now. So far, all of that looking to pretty much stay the course. The same thing with the S&P. Maintaining that. So far, just looking at these recent highs, the indicators look okay. They seem pretty happy with that. The weekly looks really nice in isolation, looks just really good. Monthly starting to become a bit more overextended. Okay, away from these moving averages, just kind of keeping an eye on previous moves away. So it's certainly getting into an area where it's going to have to, I'll be looking for a bit of a retracement back down. Overall, the trend is still bullish to the upside. Just means that I'm cautious with regards to shorter term moves and more protective with my stop loss in terms of trying to get to break even and taking some part profits as we go. Nasdaq being again the most bullish of the bunch, taken off. I don't know why I keep struggling with that, bullish of the bunch. Weekly, definitely starting to head away from the moving averages, starting to enter territory where it's going to become due for a retracement. Monthly, absolutely starting to do that. Again, it's most likely going to attempt to take a run at 10,000 at this stage. Nice, strong bullish candle, definitely overextended from previous cycles. Almost parabolic in its behavior. Certainly close to 10,000. Maybe it's going to attempt to touch it, and then we'll get a bit more of a breather. Okay, on that. Looking at the Russell 2000. All right, it's broken through strong resistance, tested it for support, and is now attempting to continue. Not overextended on the monthly at all. The daily just a little bit more sluggish in its approach, but the overall move to the upside still looking bullish. The FTSE 100 of the lot so far, not as strong, forming a bearish rejection candle last week, and it's not really the best, strongest trending one anyway. It's never been it hasn't been a favorite of mine for years to trade, other than very short-term opportunities, because it just doesn't trend as well as the US markets. Then looking at the German DAX, this one actually looking good, having broken through to fresh highs, and again not that overextended on any of the time frames, but pushing through its very nice, beautiful test of previous resistance with a nice bullish candle. That looks right. The French CAC, same thing again, also not overextended, looking relatively healthy. So all of these so far looking stable at this point in time. The Euro stocks similar as well, starting to definitely become a bit overextended on that monthly basis. So at some point it would be nice to see it come back to test 400. For the moment, looking pretty stable. So smaller retracements during the week make sense, but higher time frames look a bit more stable. And then the Australian ASX, really looking so good. It's been a bit of a lagger, but it's just trending beautifully, looking very nice and stable, actually on multiple time frames. So aside from perhaps smaller retracements back on that daily for the time being, it should look pretty good. If there's any significant changes during the week, we've passed on from payrolls, we're kind of heading towards, we're now in the middle of the month, so we might then have a look at FOMC, and if there's any potential fallout from that. But so far, unless there's any significant changes this week, my expectation is cautiously for this to continue to attempt to keep crawling upwards, and there's nothing that's ringing any alarm bells here.